For more on what this all means for the chip makers, let's bring in Jared Weisfeld, tech sector specialist at Jefferies. He's on the fast line. Jared, good to hear from you.
Good to hear from you. Thanks for having me on again.
What do you think is behind the decline, the rollover that we've seen in semiconductors broadly?
So taking a step back from a broader cycle standpoint, I think the bigger issue has been concern, certainly from a supply chain perspective that everyone on the show has just highlighted here over the last few minutes. But I think there's this broader concern on what end demand really is from an underlying consumption standpoint. There's this bottleneck in the supply chain that continues to build up. Lead times are lengthening. And if you think about lead times in terms of the time it takes to receive certain semiconductor products, in some cases it's 70 to 80 weeks. So, clearly, a year and a half to get products, and that's not sustainable. So I think there's this fear that, as production comes online, you're going to have this mismatch from a supply-demand perspective, and that's certainly been weighing on the complex when you think about the multiple drivers of semiconductors. But for sure, this Apple, I think everyone hit it on the head over the last few minutes here. This Apple news, I think, was very well telegraphed, and we can certainly get into more of the details here. But I think this should not be a surprise to many, and I don't think it's necessarily a view of demand destruction.
70 to 80 week lead times for some component. I mean, that is a staggering stat, Jared, and I'm wondering what sorts of components those are and who makes them. I'm just trying to figure out where where amongst the chip makers, who is the most vulnerable to demand destruction? In other words, when they finally get the components out, they're just going to be mismatched on the economic cycle.
Yeah, for sure. So, similar to what we saw tonight in terms of Apple potentially cutting their builds by about 10 million, given their inability to procure chips from Broadcom and Texas Instruments. Yesterday, we had another negative pre-announcement in the space in terms of Aptiv, which is in the automotive supply chain, negatively pre-announcing, specifically for that reason as well. And that's where all the tightness that we're picking up is when you sort of look at the broader semiconductor supply chain, the critical components that are going into the automobiles. You've seen it now in terms of just all of the newsletters coming from the automobile lobby and all of the shortages and constraints that are in the system, compounded by multiple natural disasters that we've had in Texas with the freeze. We've had a fire at Renaissance in Japan. It's sort of been a perfect storm, no pun intended, in terms of just on the automotive side. And that's really where we're seeing the longest lead times in terms of the supply chain.
Hey, Jared, it's Dan. Thanks for joining us, bud. So this week, we're going to get some earnings out of Taiwan Semiconductor, and I just want to kind of get your take. The stock is down about 25% from its all-time highs made earlier this year. It's bounced off of 109 a couple times. That's where it is right now. If you look at the out number, can we believe the out year numbers? Because consensus has it growing, I don't know, earnings at least 20% and sales at least 20% year over year, trading about 23 times. That seems kind of reasonable. Are you waiting for the print before you want to buy this thing? And where does this fit into your buy list of semi names that have been beaten up of late?
Taiwan Semi is really interesting because it's, the largest foundry on the planet, and it's viewed as the gold standard in terms of just such a diverse end market demand and sort of best of breed across the board. And I think there's so much nervousness in terms of where we are in the cycle, in terms of what we've just been talking about. So can this print actually be a clearing event for the stock? It's certainly pretty interesting because there have been telegraphed price increases that have been going through the system, which would allow TSMC to potentially overpower any kind of near-term weakness. And I think the bigger question to ask on TSMC, you look at their customer base. It includes AMD, NVIDIA, Qualcomm, which just announced a $10 billion share repurchase authorization a few minutes ago. If you look at what the unconstrained demand environment looks like for a lot of these leading edge players that are levered to hyperscale and compute over the next few years, TSMC is the best way to play it from that standpoint. So you can make the case that players like NVIDIA and AMD could actually benefit if you have any kind of loosening up of supply that occurs. And the key item to watch down on TSMC is their CapEx forecast. They're going to spend about $30 to $31 billion this year. Folks are definitely expecting a pretty significant increase into 2022, perhaps as much as 20 to 30%. So you could have some relief on the way to the extent that you have a larger than expected budget for semiconductor capital equipment into next year.
I know the producers are going to be screaming at me, Jared, but I do want to ask one more question about the automotive supply chain, because I'm wondering, how is it that Tesla is able to get all the chips that they need? And granted, Tesla's a much smaller manufacturer than a GM or a Ford. Is it a difference in the kinds of chips? Is it the priorities of the chip makers themselves in terms of customers? I'm wondering if you have a sense of that.
Yeah, I think you hit the nail on the head here in terms of just number of units. You sort of look at a Tesla versus a GM or a Ford, and while it's certainly the quickest category of automobiles in terms of EV and what that means, not only from a unit standpoint but also a ton of silicon content that's going into it. It's just you're dealing with just such a smaller base relative to the larger OEM. So I think that's exactly the point. But certainly if you go through Tesla's filings and risk factors, they certainly highlight the semiconductor shortage as a potential risk for their business longer term as well.
Yep. Jared, great to speak with you. Thank you so much.
Thank you. Appreciate it.
Jared Weisfeld of Jefferies. Guy Adami, how do you trade this?
It's interesting you mentioned Qualcomm because I saw that headline as well. $10 billion buyback is not insignificant. I mean, I think it's about $130 billion market cap company, one. And if you look at where Qualcomm recently traded down to, this 122.5, 123 level, that's where we bottomed out in March. So I think Qualcomm is interesting, but I think he makes a great point about AMD. They probably do stand to win. I've always been shocked how Texan gets this premium valuation, trading close to 25 times next year's numbers. They don't really have the commensurate growth. I think Texan's the one you have to watch out for here on the downside.
Karen, did you get a little bit worried about GM when you heard Jared talk about the long, more than year lead times?
A little bit. I mean, I'm always a little bit worried about GM, honestly, but despite them being able to put up really good numbers, I'm concerned broadly. I mean, this is a long time for everything, right? And at some point, I do think even for long lead items, at some point you do have demand destruction because they have to do some other alternative, even if it isn't a competitive car or something like that. It might just be an alternative way of transportation. Decide, all right, we're just, buy used or something. So I'm concerned about this more broadly as it works its way through the economy.